very different response from the market to Sappi's results today than to Mondi's trading update last week. Do you think Ralph was convincing there?
Well, I thought the interview was interesting insofar as Samantha's pink jersey was different this quarter. But everything else was basically the same as the last quarter and the quarter before. I'm tired of listening to that story now. Move on.
So you're not a fan of pulp and paper, are you? How about commodities? Are you a fan of commodities, given the clobbering they took last week? Because we have seen huge movements downwards in some of those commodity prices.
Fascinating, fascinating. I mean, Thursday was the critical moment. You know, I think the interesting thing about it is that there's been, over the recent years and months, an increased amount of speculative trading across the commodities complex. And silver, of course, was the standout one, which had gone parabolic and so on. And I think what was particularly significant in silver's fall was the exchanges beginning to talk about higher margin requirements. Because if you look at the way these things have traded, they've traded like risk speculative instruments and not like the sort of safe haven trades that people associate them with. And I've been saying this about gold for a long time, and that is that gold is going up because it's going up, and it's attracting a whole lot of hedge funds, long-only ETF speculators, all sorts of retail day traders and the likes who've been buying this stuff, and it's going up. And you see the professionals moving from one commodity market to the next. So they've been in the softs, you know, the agricultural commodities like coffee and sugar they were last year. Then they kind of move out of that and it falls down. Now we're back in the metals. It's only a question of waiting to see where it goes next. But, I mean, it's some big, big money that's being lost there. There were stories today surfacing about a hedge fund based in New York, which had lost $400 million. $400 million out of a $5 billion fund on Thursday last week. Big positions long oil, and they couldn't understand why it was falling from the levels that it was. So, but we've seen all this before. I mean, we had this with Amaranth, you'll remember, like 18 months ago, when the natural gas market in the US got totally cleaned out, and it emerged over time that there'd been one huge buyer that had just been elevating everything, and when they got crunched, everybody could smell that there was chum in the water, and then the sharks were moving in. I mean, I don't even know what silver's doing today. For all I know, it's probably up again.
I'm sure the hedge fund will make us $400 million back one way or the other.
No, I think there's always one or two big casualties in these slumps. So, I mean, I think, you know, like I say, they get sniffed out, and then the market starts to kind of stabilize. I guess the question is, do they now move on to something else? Or is this going to be this space where we see another big sort of rally in the precious metals? I don't know. Well, who knows?
Well, a couple of casualties of Stuart Theobald's column in Business Day today, Maria Ramos and Bobby Godsell.
You know, I love that article because Stuart's an experienced journalist, and unlike some of the gadflies that show up at these Investment Analyst Society meetings, you know, the little old rotund fellow who wanders in and lifts up his spectacles onto his forehead and then starts kind of pointing out the errors.
I know the one that we're not going to mention his name.
Starts pointing out the errors on page 16 of the annual report. I mean, what Stuart is doing is, in the public domain, he's taking a swing at two titans of the South African industry who don't get taken swings at enough. So the first is Maria Ramos, CEO of ABSA, and, you know, corporate titan left, right and center. And the question he's asking is whether her recent appointment to the Richemont board is in ABSA shareholders' interest, because the Richemont board meets 5 times a year. It meets in Geneva, and that means it's like 15 to 20 days worth of travel if you add it all up, and board meetings and what have you. So how is that of interest to ABSA shareholders? And ABSA right now, as we speak, is busy, you know, contemplating staff cuts and the likes. You know, looks a bit questionable.
And the problem with Bobby Godsell?
That's because of the Free World Coatings deal, where the Japanese company Kansai wanted to buy, and there was 90% shareholder approval, and they weren't even going for it. He argues that they were acting in the interests of, you know, shareholder visibility and so on, but it didn't come off looking particularly good, blocking what appeared to be a legitimate cash offer for the company.
But then surely he was right to step down from the board in that case.
He did, but the question is, should he have fought the fight for so long when it was patently obvious that the price that was being offered was attractive to the shareholders?
Random stock of the day, Metair. What can you say?
Ah, Metair. What Metair?
Metair.
Oh, Metair. Metair, yes. So this is a spares company which is involved in the motor trade. I don't
must
think
be
it's
doing pretty good in this market.
Well, I don't know if it's of a huge interest, but it used to have larger interests, and it used to be associated with the Toyota Group. But we've got to leave time for my joke of the day.
Parting shot?
Yeah, what's the difference between corn and onions?
Well, you tell me. But I know the difference. But
the difference is not that the one makes better soup than the other or grows on a higher plant. The difference is you cannot trade onion futures. So back to our point earlier, corn futures have been flying up and down, speculative trade. As far as onions are concerned, the only way you can speculate in onions is to buy a wheelbarrow full and put them in your garage.
Here's an opportunity for that hedge fund that lost the $400 million.
Long onion position.